And the AFEX Commodity Index was the only one in the green in the week of March 6th to the 12th. While the AFEX Commodities Export Index closed unchanged, all the other indices closed in the red. For details now, let's talk to Michael Martin, Portfolio Manager at AFEX. Hello, Michael. Great to have you.
Hi, Laddie. Good morning. Thank you for having me once again.
Thank you. So bring us up to speed with the week's activity at the exchange.
So over the course of the week on the exchange, we saw a bit of downturn with regards to the activities happening on the exchange. So the total value of transactions traded on the exchange fell by 88.83% from around 2.06 billion to close the trading week at around 0.23 billion naira. The total number of contracts traded on the exchange also fell significantly by 70.52% from just over 41,000 contracts to close the trading week at just over 12,000 contracts. The total number of deals also fell by 68.04% from around 97 deals to close the trading week at just 31 deals. We, however, saw a bit of green with the AFEX Commodities Index, which is the ACI, which went up by 4.06% over the course of the week from around 382.53 to close the trading week at 400.14. And as you had mentioned earlier, we saw no significant change in the AFEX Export Index, which opened and closed the trading week at 159.35. With regards to the volume traded on the exchange, we essentially saw a downturn, like I mentioned earlier, with maize, soybean, paddy rice, and cashew all trading less volume this week in comparison to the previous week. All the other commodities under consideration traded little to no volume in total. With regards to price, we only saw significant price gains in three commodities, majorly the grain commodities on the exchange. The first of which was number one, maize, which gained 3.10% over the course of the week, gaining 600 naira in the contract value to close the contract value at 20,001 naira per contract. The other commodity was soybean, which gained 2.82% over the course of the week, gaining 867 naira to close the contract at 31,617 naira per contract. And lastly, we saw a bit of a positive return for paddy rice, which gained ever so slightly by 0.10%, gaining just 20 naira in the contract value to close the contract trading week at 19,495. All the other commodities under consideration traded little to no volume, as we had mentioned earlier. Hence, there was little to no change in the price of the commodities under consideration. And lastly, we also have the FETC, which saw no significant gain in price over the course of the week. And as we always mention, if you always want to learn more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get started investing in commodities, you can always download our COMEX app on the Apple and Google Play Store. So that's by and large all of what happened in the commodities market in the week under consideration, Ladi.
All right, Michael, yeah, we saw the price of grains. You talked about maize, soybean, and paddy rice gain in the same week under consideration. Is that a sign that the grains market is to continue its bullish run after weeks of retracement?
I mean, I believe that to be the case. So if you look at how the market sort of trended upwards in the month of, that's from the month of December to the month of January and then February, and then even to, I think, the first few weeks of the month of March, it was an extended bullish run. And as we discussed a lot of times in the past couple of weeks on the show, we had a few weeks of retracement whereby it seemed like the market was just trying to gather enough momentum to continue its bullish run. So I strongly believe that the market is poised to continue upwards. The bullish run was sort of evidenced in the inflation report that was published in the month of January and also in the month of February. And with the recent one that is due to come out tomorrow, we also expect it to show that prices for commodities are supposed to continue, are expectedly, to trend upwards.
All right, Michael, it's the Ramadan fast. Is this going to affect the price dynamics in the commodities market? And please run us through the website again when you're done.
Oh, okay. So with the Ramadan fast, there's a bit of an effect of the Ramadan fast on the commodities market, but it's not significant, right? So what we tend to do, so some of the activities that our Muslim brothers and sisters sort of engaged in during this period is they tend to buy extra amounts of rice to sort of distribute to each other in an attempt to help each other break their fast. But it's more so the case that a lot of this rice is purchased from rice millers, and of course it's the case that with the rice millers, with the rice that they're currently selling now, they didn't procure the commodities, or they didn't procure the raw materials, which is the paddy rice. They didn't procure it in this particular month. It was procured a couple of months ago, say 2 or 3 months ago. So it's expected that the price of the commodity has already adjusted, right, to that reality or to that increase in demand a couple of months ago. One other tendency that we also see in the commodities market is with logistics, right? And it's the case that for drivers that tend to go long distances, it might be the case during this period that they might be unwilling to go that long a distance, considering that they would be on empty stomachs, and I don't expect that anybody wants to go that long a period of time without eating. So it's possible for us to see a bit of a slight trend upwards in logistics prices, but like I said, at the end of the day, it's usually the effect of the Ramadan fast on the commodities exchange is usually negligible at the end of the day. And like I said earlier, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And also, if you want to learn more about investing in commodities directly, you can download the COMEX app on Apple and Google Play Store. Somebody will be assigned to you in terms of a body. They will take you through the entire process of how to get started investing in commodities. And it doesn't matter what you're interested in, whether or not that's a spot contract or whether or not that's a fixed income contract or fixed income note. We have all those products available on COMEX for you to trade and make a lot of money.
All right, Michael, thank you very much. Perhaps we'll take that advice from you. Thank you. We do appreciate your
please
time.
Do.
Well, still talking about the AFEX commodities. Of course, Nigeria's commodities market has continued to evolve, with risk management continuing to be a necessary consideration in the increasing participation of players in the sector, especially as it relates to financing and credit. Oluwafunto Olashemo, Market Development Manager at AFEX, will have this conversation with us. Thank you very much, Oluwafunto. I keep apologizing. I hope I'm not murdering your name. Okay. So when it comes to risk management structures, traceability and transparency are very key. How does AFEX ensure that the players in commodity value chains are able to get visibility of the processes and activities that occur along the value chain?
Okay, thank you very much for the question. Quite interesting one. Let me start by saying that risk is a very important component of the commodity value chain, and risk pretty much are the uncertainty that are involved in the production, distribution, and processing of commodities. And for you to even talk about risk management, you need to understand what are these risks that are inherent in the commodities value chain. So within the commodity value chain, you talk about production risk, which has to do with the quality and quantity of commodity produced. You talk about market risk, which talks about availability of counterparty to offtake the commodity produced. You talk about price risk, which talks about the possibility of losses if there's changes in the prices of commodity. Market risk and price risk usually would vary from commodity to commodity. You also talk about institutional risk, which talks about the impact of government actions and policy on the commodities market. Also, you talk about credit risk, which talks about the ability of a borrower to pay back whatever loan or borrowing he or she has taken. Now, as a commodity exchange or as AFEX, we leverage on a number of things to ensure that and give comfort to players within the value chain. One of them is access to market data and information. So when you trade on a platform, you get real-time market information that allow you see activities of what is going on. And then right there and there, you can assess your risk exposure and implement necessary risk management strategy. We also do believe in technology, because technology is actually a key player in ensuring transparency and visibility across all the moving parts within the commodity value chain. So technology allows players within the value chain to see all that is happening in real time, and then they can begin to implement their risk management strategy. Last but not the least is also access to market. Access to market is very, very important for all the players within the value chain, as it helps to facilitate the trading and settlement of this commodity transaction. And in so doing, you are able to put a proper structure to the entire commodity value chain.
All right, talking about data now, what role does it play in this equation?
Okay, so data is actually a very, very important part of the commodity value chain, as your understanding of data would help you to be able to assess your risk exposure as a player within the value chain, right? At the moment, due to the fragmented nature of the commodity value chain, data is actually largely asymmetrical. And this has made us see very low and reluctance of investors coming into that space because of lack of data. So by having data readily available to players within the value chain, we will see motivation and interest in pushing more investment within the value chain. And then the opportunity within that commodity value chain can be more optimized. So and then in terms of the nature of data in the country, right, it is still pretty much low, but it is improving. And you see in private entities like AFEX Commodities Exchange investing heavily in data capture and presentation, so that the larger participants within the value chain can understand the market, understand the risk involved, and then implement appropriate risk management strategy.
Yeah, talking about the state of the data bank for Nigerian commodities market, how does it look to improve in the coming year?
Okay, so again, just as I mentioned, to improve in the coming year, there has to be lot of effort towards data capture and presentation, because again, what people do not understand, they cannot embrace and utilize and optimize fully. So again, there has to be increased investment in how data are captured, how data are mined, and how data are interpreted in order to ensure that it plays a critical role in management of risk within the commodity value chain.
All right, a lot of conversation around agriculture and risk revolves around insurance. What do you think about insurance and agriculture specifically?
So, very interesting question, right? You know, when we look at the contribution of GDP, of agriculture to GDP, is actually very huge. But again, if we look at investment in that space, still very, very minimal, very, very at its low stage. And the reason is because of the perceived risk in that sector. Insurance is actually a very critical role in risk management within that agricultural value chain. However, as with other penetration of insurance into the other sector, penetration of insurance in the agricultural space has largely still been very low. And these are due to a number of challenges like cultural and religious consideration, non-availability or limited availability of agri-based insurance, and asymmetrical information within that space. So for us to see improvement in that and to ensure that insurance adoption within the agri base is improved, then we really need to address these challenges, education of the key players within the agri business, particularly those on the production side. And there's also the need for capacity building. Again, you cannot provide solution to an area you do not understand. So there has to be capacity building in underwriting risk within the agri value chains. That would then help inform the development of innovative products that are directed to commodity value chain or agri value chain. And then it begins to give everybody comfort within the value chain to participate effectively.
Now, with the commodities market evolving, how is AFEX creating products to allow investors leverage on sectors without fear of risks involved?
So as you're all aware, AFEX is the first private licensed commodities exchange that is functional within the space. And we owe that to our wealth of experience of having to do a lot of backward integration on understanding the commodities space. So for us to give comfort to investors so that they can comfortably come into the space, invest without the fear of risk, we leverage on that experience. And in every aspect of our product development, we're able to identify inherent risk in each of the stages of the value chain. And then we're able to create mitigants around this risk, and in such a way that it de-risk the product for whoever is going to participate in it. And for a very classic example is the asset-backed commercial paper, 50 million asset-backed commercial paper that we issued in Q4 last year, right? The collateral in it served as the commodity in it served as the collateral to the transaction. That actually helped address the credit risk of the obligor. So it gives comfort that in the case of a default on the credit side by the borrower or the obligor, there's recourse to the underlying asset that can then be sold in the market, and then the principal and interest can be recovered. There's also, again, technology cannot be overemphasized. It is the backbone of all the products that we create because it provides visibility, access to market, access to data. So players within the space can begin to assess in real time their risk exposure and begin to implement risk management strategy.
Well, technology seems to be the key to any business going forward, I guess.
Sure.
Well, Oluwafunto, thank you very much. We do appreciate it.
Thank you very much for having me again.
Thank you.
Yeah, sure.
All right, we'll take a moment. We'll be back.